Sprouts Farmers Market is up over 115% since Mo and I bought it. And God's honest truth, we're both absolutely pissed about it. But before we get into why we're pissed about it, first off, never buy an investment because somebody on the internet has it. The goal of our channel is to teach a process. If you learn that process, in addition to it, if you learn the emotional structure it takes in order to make good investment decisions, you can apply that to any investment out there and to investments that you understand better. Second thing, our goal and why we're pissed about this, we want Sprouts to go cheaper. I did not get my full investment in there. Mo invested more money than I did. Mo, did you have your full investment in?
No, I was a little bit shy.
Now, Mo's investment number was about where I wanted to be. I wanted to invest about 1% of my money into Sprouts. I got about 0.7% of it into Sprouts. Now, it's up a ton. We love it. Are they killing it? Absolutely. We've got a lot of great data to share with you, a lot of great charts. So watch this whole video to see how we think about it. The first time I was ever in a Sprouts Farmers Market. Mo, do you remember when that was?
Arizona.
Yep. We went for my dad's 70th birthday to Phoenix, Arizona, Scottsdale, Arizona to play golf. And there was a Sprouts about 2 miles from the house we rented. And we'd go in there. And apart from the fact they don't have real pop, which I let them slide, they had phenomenal food. It was a clean store. It was organized. It was small. It wasn't this huge 100,000 square foot BS. It was just a very easy store. And they had very good chips. You remember that, Mo? I kept
Amazing
going back to buy and amazing cookies. And I kept going back to buy more. We went to that Sprouts Farmers Market 4 or 5 times on that trip, and it was only like a 4-day trip. Now, as you can see here, Sprouts is killing it from a stock price perspective. But does that mean that it's killing it from a value perspective? Remember, there's a difference between price of a company and the value. Your goal whenever you invest is to buy $1 for less than $1. Sprouts is a fast-growing business. Let me show you their growth. These are the numbers of stores that Sprouts had over the last, going back to 2009. 40, 43, 103, 150, 170, 190, 386 in 2022. And I believe they're over 400 today at 408 stores, give or take. Mo, what's the exact number?
414.
414. Their goal, they haven't specifically said what it is, but it's around 1,000 to 1,250 stores. So they still have potential of 2.5 or 3x their number of stores. Now, here are some other things that I love about Sprouts Farmers Market. If you know, the world of grocery stores is very low margin. For example, Kroger, those kind of places have about a 1 or 2% bottom line profit margin. Theirs, 3.94 for 5-year number, 4.25 for the current number. And a big part of what's driving that, Mo, are you familiar with the Sprouts brand penetration? This is their own personal brand. So overall, Sprouts' general gross margin is about 40%, but their own personal brand is about 50 to 60% gross margin. And look what percentage of their sales. 2019, it was 14%. Last year, over 20% of their sales. As they drive this up further and further, it's going to make that bottom line profit number grow and grow and grow.
So they're almost going with the Costco, how Costco has their Kirkland brand, kind of doing everything internally.
Yeah, and guys, that's a great way to drive up gross margin. And on a low margin business like Sprouts, to be able to drive that bottom line profit margin even higher. So not only can they 3x their number of stores, look at the gross margin they can bring into the store. I wouldn't be surprised if down the road, this was a 6 to 8% bottom line profit business. That's potential as they keep driving up their percentage of the revenue coming from their Sprouts brand. That's a huge potential. Again, they've got to implement that. But speaking of implementation, they brought the CEO on from 99 Cent Store who understands retail, understands capital allocation. This guy's come in and he's taken the new stores from 30,000 square feet in size to 23,000 square feet in size. All about efficiency. Mo, do you know what it cost them to open a new store with inventory, build out, et cetera?
I feel like you have the number off the top of your head.
I do. $3.8 million. That's actually not bad at all.
That's it?
That's it. That's all it costs. Exactly. I would have guessed before I even knew about the company, I would have guessed 10 million or so. I don't know.
I was thinking somewhere between 10 and 20 million.
A huge number you'd have thought. I mean, you're talking about build out, talking about inventory, all these things. It's 3.8 million. But here's the best part, Mo. Let's go to their balance sheet. Their balance sheet will show us how much cash they have. They have current cash of $200 million. 200 million divided by say an average of $4 million to open a store, they can open 50 stores off the dribble. Just with cash in their account, they can open 50 stores. And there's a lot of great data on these stores I'm gonna pull up for you. These are their new store data. Box opens on average 13 million in year one in annual sales, grows 20 to 25% over the next 4 years. Break even year one, grows to a blended 8% EBITDA. So here's a $3.8 million and cash on cash returns of low to mid 30s by year 5.
Wow. I can't believe that. And I can't believe the break even number.
Absolutely incredible. Very well run organization. Now, I will be honest with you. I have some concerns. Let me show you guys about their map. But the concerns I have about this company are a little bit different than most would think. These are their stores by state. I love this chart. We have nothing. I mean, look at this. Midwest, nothing.
Completely undeveloped.
Undeveloped. They believe they can open 100 stores just in these 4 states, California, Arizona, Texas, and Florida. 100 stores, guys. That'd be 25% growth in the company just from those 4 states. And guys, they haven't even touched New York yet. Look at this. This is incredible. There's so much growth potential for this company, and they're being smarter about the growth. The concern I have with any retail that's fast growing is the Borders bookstore growth issue. I've talked about this story many years ago, but Borders was started in Ann Arbor, Michigan, and their first pitch was we want to have X number of stores, and it was a very specific number, like 276 stores. I don't remember the exact number, but they based it on demographics. But once you go public, what does the public pressure put on you? Grow, grow, grow. So Mo, what did Borders start to do?
Oh, they probably just started to grow, and it probably hurt exactly what they were trying to do in the first place.
Exactly. They got away from their metrics. They got away from their fundamentals. Mm-hmm. Now, with that said, they still have to 3x before they get to their ideal size. But remember, guys, growth isn't always great just for the sake of growing. If you grow too big, one of their big things is they want to have their stores within 250 miles at most of any distribution center they have. So right now, I look at this saying, are you telling me that New York and Ohio alone couldn't support 20 stores each? I gotta think they could easily.
Definitely.
So I look at these growth potential, and as they continue to grow further and further into other areas, they're gonna sit there and they're gonna drive in that bottom line. They're gonna make things more efficient and drive that bottom line. And they're gonna grow their Sprouts brand even more at 30 to 40% higher margin than what they currently have. Now, Mo, you know I don't really care about short-term outlooks, but what is the 2024 full year outlook that Sprouts is announcing?
So just looking at these stores that you were talking about, they're looking to add 35 new stores. So that's pretty good growth right there. Net sales growth, 7 to 8%. Comparable same store sales, 2.5 to 3.5%. Adjusted EBIT, as you talked about, 415 to 425 million. Earnings per share, $3.05 to $3.13. So, and then CapEx, 225 to 245 million. So it seems like they really think things through. They don't grow to grow. I mean, we saw how blank that map was in the north. They're only going to open 35 new stores. They could probably go out there and say, hey, we're going to open 75 to 100 new stores and just start going to new states, but they're not doing that. Yeah,
that's absolutely true. And the revenue growth, I really think they're doing it smart, and that's a big thing that we look for when we find smaller companies. Because remember, guys, this company is now a $7.8 billion market cap business, but when I started buying it, it was $3.3 billion or so. Now, this thing, I have no idea where it's going to go. Could it go to $100, $200? I have no idea. All I know is I like the story, I like the people in the business, and I like the idea of owning more shares. The question is, what's the right price here? Guys, in everything we do, you see companies like this go up, and trust me, I get excited too, saying, okay, well, I didn't get my full position, but if this is the start of a great drive of a multi-bagger, I'm fine with that. I didn't get my full position, but I got a good enough position, and it keeps growing. But the key here is, do I think Sprouts Farmers Market will be around for the next 10 or 20 years? I do, unless what happens, Mo? I think unless they get bought out.
Yeah, exactly.
I mean, look at Whole Foods. Amazon went and bought Whole Foods. That's a possibility. Mm-hmm. But if they get bought out, they're probably going to be bought out for quite the premium by somebody. So I'll probably do well there. 2, do I think their revenue and profit will be higher 10 or 20 years from now than it is today? Mo's shaking his head for a reason. Mo, every single point we've seen before, they're growing the stores, they're growing their Sprouts brand that has a higher margin. Everything is saying they're going to make a lot more money. So the question becomes, the third and most important question is, can I pay a reasonable price today for the company that gives me an adequate return on my capital? Well, let's check that out. The hard part is being able to stay in tune with that and saying, okay, if the stock fell 50% tomorrow, what would I do? Well, of course, if it fell 50% in one day, I'd say, okay, what happened here? But usually that's an overreaction. Just like GameStop went up 110% at one point on Monday, the question you have to ask yourself is that a reasonable response here? Well, the emotion of it can make it feel reasonable because you sit there and see a stock fall, and guess what's going to happen in the news? All the news is going to be about why the stock fell and why it's a terrible company. What your job to do as an investor is to pull yourself away, take a breath, and say, okay, what has changed in my thesis? Has anything materially changed? Yes, there could be a short-term aberration. There could be something but is it long-term going to affect the company? That's the question you have to ask yourself. Every great investor, Peter Lynch, Warren Buffett has said, nothing is better than buying a great company that falls because of some sort of short-term issue that they can fix. So no matter what causes a stock to fall, whether it's sentiment shift or whether it's actually something that was wrong in the company, is it a permanent change in the business? And that's hard to go through. That's hard to deal with, to separate the facts from the emotion. And that's exactly why I started the channel. That's exactly why I created the community. I want to sit there and have people have an environment where they could sit there and talk comfortably with thousands of other like-minded investors and be able to control their emotions. Because guys, you make money based on making a buy decision, but on fundamentals, but the way you're going to really grow your money is by sticking with a good company for the right reasons. And that takes emotion. Anybody has the brain power to buy a stock. Who has the emotional ability to ride the stock out? And that's very difficult because sometimes, like BlackBerry, iPhone came out. I'm sure there was stories like iPhone's going to take over BlackBerry. And I'm sure listen, I kept my BlackBerry for a long time. I would have been the guy who said, no, I don't think they're taking over BlackBerry. Whoops. And look what happened to BlackBerry. So there are permanent shifts that do happen. The question is, when every news story that comes, with every stock fall that happens, is it truly about that? And you need to be able to have a community where you can talk to other investors and get an idea of what they're saying. Because it's nice to bounce ideas off of. People in there disagree with me all the time, and I love it. People disagree with each other in a mature and respectful way. That's one thing. So guys, if you want to make less emotional decisions that might cost you money, click the link below, $7 for 7 days, but there's a limited number of spots every day. So make sure you go sign up before the wait list occurs. Now, look at this, Mo. The analyst estimates, not much growth for EPS for Sprouts. And I wonder why that is. Are they missing something here? Yeah, it's funny.
When you compare that to what the full year is out of their last report that came out on May 1st for full year 2024, $3.05 to $3.13. And we have mid $2.83.
Yeah, and their highest number here on analysts is $3.09.
Yep.
Proof, guys. Analysts, you have to be able to assess a business by yourself. Great news is we have analyst estimates on here just to see what people are saying. But here's the revenue growth estimates for the future. And this is what I find funny. What is that? A 30%, almost 25% revenue growth from this year to 3 years from now, and analysts are expecting less profit? Maybe. A lot of things could happen. But I look at this company saying, good company, good management, I like this. So what is the right price to pay for Sprouts? Let me pull up the last time I did Sprouts. April 30th. Mo, here are my assumptions. And I don't think these are good. I think these are low assumptions. I did 3, 5, and 7% revenue growth.
Okay.
I did 3.25, 3.75, and 4% profit margin. And for free cash flow, I did a little bit higher of 3.5, 4, and 4.5%.
Okay.
How do you stand on those ones so far?
I like them. I don't think that they're too low.
Yeah, but remember, we're talking about Sprouts really growing their brand.
Sure.
So this will really drive up their potential profit margin and free cash flow. Mm-hmm. Now for PE, I put 14, 16, and 18. Same with price to free cash flow.
Okay.
And now for my desired return, I put 9%. That's the market return, 9 or 10%, put whatever you want in there. I put 0 margin of safety in there. Folks, you need margin of safety, especially with smaller companies. The higher the desired return, the more margin of safety is in there. So I strongly encourage you to do that because valuation is an imprecise art. We don't know the future and we are humans. We make mistakes. That's why you need margin of safety. So I do think I'm being conservative here when I hit the analyze button, but here are my values. I have a low of 32 to 35, a high of 63 to 70, and a middle price of 48 to 50. So guys, at this price, I'm just going to let this company ride out and see where it goes. And if it falls in my price range again, I will buy it. Thank you very much for your time.